Well, good afternoon and welcome to the world of business. I'm Nokip Kimboy. The National Treasury has announced that the Kenya Pipeline Company initial public offering was oversubscribed by over 105%. The government of Kenya did offer 11.8 billion shares. The total number of shares applied for stood at 12.5 billion. The government has retained 35% of the shares. 67% has been allocated to Kenyan individual and institutional investors, while the ESC investors, including Uganda, have been allocated 32.65% of the offer shares. Esther Dan with more.
The Kenya Pipeline Company's initial public offer has hit a subscription rate of 105%, attracting 112 billion shillings against the target of 106 billion shillings. The National Treasury has said it would refund the excess 5 billion shillings. At least 70,000 ordinary Kenyans subscribed for the offer. KPC will on Monday start trading at the Nairobi Securities Exchange and is expected to be among the largest counters by market capitalization at the bourse. Focus now shifts to the yet-to-be-established National Infrastructure Fund, where a proportion of the IPO proceeds are expected to be deposited as seed capital, in turn attract 5 trillion shillings from private sector players for mega infrastructure projects.
So we moved ahead to secure that, to register the fund, but it was not conclusively registered. Until now, the government made a decision to go the route of setting up a fund through a bill.
The IPO was largely supported by institutional investors from Kenya and the region. Local institutional investors will hold 41% of KPC, while those from the region, including Uganda National Oil Company, will have 21.2% stake. Kenyan retail shareholders will have a 2.56%, while foreign investors will hold 0.02% and KPC employees will hold 0.06%. The government of Kenya remains the majority shareholder with 35% of the total KPC shares.
Kenyans, together with their government, will still own 79% in KPC. GOK will still own 35%.
According to Treasury Cabinet Secretary John Mbadi, the share price of 9 shillings was on account of KPC's strong position in the regional fuel transport system. The government has dismissed the claims of overvaluation as propaganda.
If the value was too high, how come it is oversubscribed? This oversubscription theory and story is in the heads of the people who wanted to frustrate this IPO.
Parts of the 106 billion shillings raised through the IPO, together with the 245 billion shillings that the government expects to get from part sale of its stake in Safaricom, will be used to set up the National Infrastructure Fund. There are, however, concerns that the fund is yet to be set, as well as the process the government is taking to set it up. Esther Diana, KTN, Nairobi.
Stakeholders in Kitui have called for reduction